The distinction between employees and independent contractors has caused confusion and tax headaches for a long, long time. Now, with the rise of the gig economy, the employee versus contractor question has surged into the tax spotlight yet again. The classification of a worker as either an employee or an independent contractor has major tax implications for both the worker and the hirer. This video explains how the IRS determines the proper classification of a worker, with some tips on how to comply with these IRS policies. Let's start by talking a little more about what makes this decision so critical. For workers, the employee versus contractor decision could affect their annual tax bill by thousands of dollars. For businesses and other organizations that hire workers, that figure could easily climb into the tens of thousands, if not far more. At the heart of the issue are FICA taxes, sometimes referred to as payroll taxes. FICA taxes are made up of Social Security and Medicare taxes, which are assessed at flat rates on the gross earnings of most workers. A worker classified as an employee only pays half of this FICA tax assessment. The other half must be paid by the employer out of company funds. By contrast, independent contractors must pay the full FICA tax amount on their earnings themselves in the form of self-employment tax. As a basic example, suppose that Melanie performs work for a company. The total FICA tax amount on her earnings for a given year is $8,000. If Melanie is classified as an employee, then she will pay half of this amount, or $4,000, through paycheck deductions. The company must pay the other $4,000. On the other hand, if Melanie is an independent contractor, then she must pay all $8,000 herself. The company does not need to pay any of the FICA tax on her earnings. As this example shows, the employee designation usually creates a significant tax advantage for the worker, while the independent contractor designation works to the hirer's advantage. It's worth remembering, though, that taxes are not the only issue at play. In spite of the greater tax obligations, many companies prefer a workforce of employees for stability and continuity. Meanwhile, some workers willingly accept a larger tax burden as the price they must pay for the greater flexibility and freedom that an independent contractor arrangement can provide. In any case, the sizable tax impacts involved certainly explain why the IRS takes such a keen interest in the classification of workers. The central IRS policy to keep in mind is that neither workers nor hirers can just choose whichever designation they find most appealing. All employee versus contractor classification decisions must comply with IRS standards. So now let's get into the tricky business of decoding those standards. IRS publications emphasize that the main factor in the employee versus contractor question is the hirer's degree of control over the worker. To see what this idea is all about, let's start with a simple example. For scenario A, suppose that Stephanie gets hired to manage a company's Toledo office. Stephanie signs an employment agreement with the company that specifies her annual salary. She will also receive health insurance and retirement benefits. The contract requires Stephanie to be at the Toledo office Monday through Friday from 9 a.m. until 5:30 p.m., with an hour off for lunch each day and 2 weeks of paid time off each year. All the resources that Stephanie needs to perform her duties are provided by the company, and she works within a clear hierarchy of people she must report to and others who report to her. Notice that in this scenario, the company largely controls when, where, and how Stephanie performs her work, all clear signs of Stephanie's status as an employee. Now for scenario B, suppose that a company based in Toledo hires Stephanie to complete a series of projects over the course of a year. Stephanie's contract with the company specifies a flat fee she will receive for each project. In order to get paid, she must submit an invoice after each project is completed. She will not receive any paid time off or other benefits beyond these specific fees. Stephanie must occasionally check in with company personnel during business hours, which she can do in person, over the phone, or by video call. Beyond that, as long as she meets project deadlines, Stephanie can set her own working schedule. She primarily works at home in the evenings, using her own computer and other equipment. She does not need to attend staff meetings or other company events.